All right, cool. Share screen. Boom. All right, can y'all see my screen? All right, perfect. So on what day was this? Whatever day that was, right? I shared, can y'all see the image? Okay, perfect. So I shared a markup on US oil on a daily time frame, as you can see right there, that indicates two positions. Well, two narratives that can potentially happen when it comes to the markets, right? And if you guys don't know what oil is not foreign exchange. Oil is its own thing, right? So if I'm sharing about content on oil, what does that tell you? That what I'm teaching can be applied anywhere and not just the foreign exchange. Foreign exchange is a currency, but oil is a whole different resource that has to do it. That's also in the market. Okay. And I said, I know I didn't do an overview on US oil, but this is something that we could potentially see play out. My question to us is, why do we think that is? And then Norbert responded saying, the market seems like great potential for profit. However, having two potential outcomes can be overwhelming, particularly for someone without prior experience. Is it possible to simplify the analysis and focus on the overall trend instead? Alternatively, could you provide an explanation as to why both markups are potentially viable, and then this clarification would greatly help beginners in understanding the situation more clearly. So I'm gonna copy this text. Stop sharing my screen on that. Boom. I'm gonna post it in the chat. That's the question. Cool. Now, let's go ahead and talk about it. And I want somebody to be my backup. Backup in the sense of who gonna read the question like one by one while I explain on the chart. So the first one, I'm gonna start with the first one. So the first one was, is it possible to simplify the analysis and focus on the overall trend instead? I'm gonna start with that. Anybody that want to read the next one after I explain that can help me. Sounds good? We're a team, right? All right, cool. Let's get it. So, US oil. So, the first question said, what was the overall trend? So when I figure out overall trend, the first thing I do is start on a monthly time frame. Okay? On the monthly time frame, it tells me, oh, okay, this is overall bullish, or if it's overall bearish. However, how do I know? I just got to make sure that I look at the monthly. So the monthly.
Excuse me. Does anybody understand what bearish and bullish mean?
No, please explain.
So, kind of to answer that, so would bearish be going down and bullish be going up?
Okay. So that's basically uptrend or downtrend. So bulls, right? When you see a bull, the horn is facing up. And usually when you see a bull, all they want to do is lift you up the ground. And bears, all they want to do is tear you down. So when it's bulls, it means uptrend. When it's bears, it's downtrend. Just clarification, because Zane thinks Zane thinks you guys are pros, so I'm just helping y'all out.
So yeah, I'm sorry. Yeah, so please continue to do that. Just chime in whenever you see me just going haywire, thinking that, people comprehend what I'm saying. Okay, cool. So we comprehend now what bullish and bearish is, uptrend, downtrend. Perfect. So on the monthly time frame, we see that overall, within the past few months, because this right here, as you can see, it's May 15, 2000, well, 1st of May, 2015, as you can see right here at the bottom. So at the bottom is where you see the time period, right? So as of May 1st, 2015, the price was at what? A resistance zone. So for those who don't know what resistance is, it means a place where market price gets up to and retraces. Same thing when it comes to support. In January 2016, the market formed a what? A support level where price got to, but bounced off to keep going what? Bullish. So sometimes what I do is I'm like, okay, well, I could just put a price level right there, and I can put a price level right here.
Question.
Yes.
Resistance and support, when you're going off of the color of the graph, resistance is red or green?
So great question. Resistance is just an area. When it comes to the specifics of the candles,
Mhm.
blue, sorry, not blue. Green is on the buy move, right? It's appreciating in value.
Yeah, it's
And
going up.
red, yeah, and then the red is retracing, it's reducing in value. It's depreciating.
Okay, but the color doesn't actually have to do with the support or the resistance?
Absolutely not. It's just an area that you have to pay attention to with your eyes. So if I was to turn this off, for example, and all I see is lines, I don't see no colors. I just see areas where market touched and bounced. It went up down here and bounced off. It came over here, broke above a little bit and broke back below, and then even came back over there again and retraced again. So basically, resistance and support, which is also equivalent to supply and demand. And supply and demand just means the zones around the resistance or support area. So supply is a direct correlation with resistance. Resistance being the price level and supply being the zone around the price level, and vice versa. Support is the price level and the demand is the zone around the price level. Does that make sense? So let me show you an example. So over here now I have the resistance, I have the support, but then I can also draw something called a zone that can give me an indication like, okay, well, price is within a zone right now. So depending on what it does outside of that zone can determine my next move, right? Same thing over here, right? Prices are the zone right now on top of the price level. So whatever it does within the zone determines my next move. So let's say I was in the market. Let's say I was in the market in this area, right? Let's say I was in the market over here where it was doing what it's doing, but then it wasn't really giving me that move. But then I saw when price came over here, broke above, back into the zone and retested it. I could have gotten for a buy right there and bought it up to that price level. Does that make sense?
I have a quick question. So at the bottom, that's like the demand zone.
So here, you see this
Yeah.
price level that says 32.80 over here to the right.
Yeah.
Can you see
Okay.
it? That's the support price level. Now, the zone around that is what we call a demand, because a price is only enough because it's just one line, but a zone is giving you a perimeter within that with the line in between and saying, look, as much as this price level is a support area, I still want to make sure that that's a solid demand area for the bulls to take over. Vice versa, with the resistance being a price level. However, I just want to make sure that that's a solid supply zone that the distributors are willing to distribute the market in order for it to reduce in value a little bit before the bulls come back in. I see some hands being raised. Go ahead and shoot your question.
Oh, I had a question.
Yeah.
You said that this was going to be posted on the Z-Band website, right?
Yes.
Okay, sorry, because you're kind of going too fast for me, so I have to roll this again.
Okay, I got you. I will definitely slow it down for you. Okay. So, oh, what's your question? Also, another bet you cool. Go ahead and ask your question.
Mine is not really a question, but to clarify what he's saying, support and demand, support and resistance could be looked as, let's say, okay, you guys are in a room Your ceiling is serving as a resistance because nothing could come in your house, nothing could leave your house above you. Same thing as a floor. It's supporting you from falling inside the floor. So anything that's, if you're struggling to break down, that's a support. If you're struggling to break higher, that's resistance. So now it depends on the trend. If it's an uptrend, the floor serves as a support and the ceiling serves as a resistance. But if it's a downtrend, it flips. The ceiling serves as a support and the floor serves as a resistance. Zane is going too fast, and it's I don't know if it's helping anybody, but you guys just keep shooting your questions and slowing him down. Um, I don't know if he already taught you guys about uptrend, downtrends, trend lines, support lines, resistance lines, but you guys do have to check out his YouTube to catch up if you haven't, so that he can move on the speed he wants to move. But so far, if you have any questions, just keep shooting it.
Thank you so much. Thank you so much, man. That's why I brought you. That's why I'm grateful you're here, because sometimes I just lose control. But fast forward, guys. If there's any other questions, please shoot it. So
Can I just confirm what he said? The floor is the support and the ceiling is the resistance on an uptrend, and then it flips opposite? Or did I write that wrong?
That's correct. Yeah,
Okay, so then the floor is the resistance and the ceiling is the support on the downtrend.
exactly. Because you're basically crashing down. So you're using the floor or the ceiling as your support to keep pushing you down. Keep pushing you down.
yeah, you using the resistance as a resistance level to make sure that the pressure of the bearish momentum is strong. Okay, and vice versa, you're using the support level to make sure that your bullish momentum is strong, because if you don't have a strong foundation, you can't bounce, and if you don't have a strong rooftop, you could fly through the roof, right? So that's what that is. Great questions, by the way. So let's move on forward now. So basically, in other
Oh, good
words,
question. Sorry. Can you also like label the like both the ranges, like the floor and the ceiling? But I can't hear you.
yeah, just for you, I'll do it because you're so special and you're making requests. I got you. All right, cool. Boom. Support slash demand zone. Resistance slash supply zone. In regards to bullish momentums, especially. Okay. So with that being said, what do we see? It's a bullish run. It's overall bullish. On the monthly time frame is bullish. As we can see, it broke the previous resistance that would now potentially turn into a demand zone in order for it to continue going what? Bullish. Very simple. So with that being said, so let's now move on to the weekly time frame, because I'm okay. Overall is bullish, but still, like, I want to see something, right? Where we at now? Well, on the weekly time frame, as we can see from last week, right? As we can see from last week, price was bullish, but then this week is so bearish. But why? Because if you look down the daily time frame, and by the way, let me slow down a little bit. You see how we drew that support, that resistance zone from the past? What did he do right here when he got over here? What did price do? He almost got to that same level, but at the same time, guess what it also did? It respected another resistance slash supply zone to the left that it then turned into a what? A support/demand zone for a few weeks over here, another week over here. Let me zoom in, right? So this week it came and supported, bounced off, came over here again, supported again, bounced off, and now we're at that same area again. So one of two things gonna happen, especially as you go down. By the way, we know we're overall bullish, but because of the market, we can buy and sell. It's a win-win. So guess what? I was like, okay. By the way, when I sent this markup, where were we? Right? We were on this side. And why did I mark up this chart the way I did? If you don't know, the market compromises of a few things. When it comes to an uptrend, it consists of higher highs and higher lows. What is a higher high? What is a higher low? Great question, Zakora. Let me explain to you. All right, cool. So over here, we have a low. What happened over here? Well, as you can see, previously we had a lower high when it comes to a bearish momentum, but then it broke above that. Oh, so now we have a what? A new high. It's not a high high, it's not a higher low, it's just a new high. Over here, it then give us a higher low, because now, guess why it's a higher low? Because previously it was a low, but now we have a higher low than the previous low, because it's higher than this one. Okay, well, let's keep going. Over here
Quick
now.
question, sorry.
Go ahead.
So for every like high and low, so it would be safe to say you mark each and every one?
You mark each level that you see, because remember, if this was all green and there was no red, I would have marked this. But because there's reds, I have to identify that in my markup.
Okay.
Because clearly they're two different colors. So if they're two different colors, why would I just look at it like it's only one color? There are two different movements at all times. Does that answer your question?
Yeah.
Okay, perfect. So Moon, then we have this higher low that is higher than the previous low. So that's how you, that's literally the market. Higher highs, higher lows, higher highs, higher lows. Reverse, now we have the downtrend. Oh my gosh, guys, it's the same thing. Oh my God, it makes sense. So we have this high over here, this high, because it gave us a higher than this high. But guess what it also did? It also gave us a low that then got disrespected. So the moment it broke below this low, that's because, you know, the buyers weren't strong enough to keep that momentum going. So you know what? They said it at this point, I'm gonna just let the market depreciate a little bit for me to really continue my overall movement. But I have to let some people get their money, or I have to take some people out so that I can move it in the direction that I want it to go. So guess what? This is where we get into what we call a correction. So the market is correcting itself to get to a balanced area. Remember, this is a support zone. And guess what? It gave us a low, it gave us a high, and guess what it did next? It gave us a lower low. What is a lower low? Well, it's only called a lower low because it's lower than the previous low. Why is it called a lower high? Because it's lower than the previous high. Same thing, you break, now it's even going even lower, and ooh, it's even more interesting now because this is the second time it's coming to this support zone. After it came here before, now it's here again. Oh, okay, well, guess what? We're not done. So now, fast forward, when I saw this in the market, the price was at this level. So I have a lower high and I have a lower low. All I needed to do was mark those areas off to see where it can potentially give me a lower high in order for me to continue going bearish temporarily before I then go overall bullish. And why did I mark that area off? Because there's something called consolidation. In the market, there's consolidation. And when you see consolidation, that just means the market is, the participant in the market are undecisive. They don't know what they want to do as of right now. So guess what I did? When I saw that price was struggling, look at this. Price was literally in this zone for 1, 2, 3, 4, 5, 6, 7, 8, 9 days. That's a lot of confusion. They don't really know what to anticipate. So when I saw it, price was over here. And I was like, okay, you know what? Where is the resistance? Where is the support? That way, if price was to break out from any direction, I know what to do next. And I said, this is a supply zone, right? I remember when I put the markup, I was like, lower high, okay, but now what's next? And this is a demand zone. So guess what happened? Now price broke below the demand zone. Guess what I'm anticipating now? Because of what I see, and is respecting the movement, the markup that I did before that move actually happened, where I said it's going to break below and retrace to continue going bearish, or is either going to break above the resistance, retrace to correct itself, and continue going bullish to clear the liquidity above this area. And guess what it did? Within the next few days, it broke below. So guess what I'm looking for now? I'm looking for price to get anywhere within this area, maximum over here, for me to then look for a confirmation of a bearish continuation for me to sell it, to go even lower, take my profit at whatever level I decide to take it at, and wait to see if he wants to continue going bullish, and if so, how high. But because I can buy and sell, I was able to draw that to anticipate the move. And so far, so good. It's respecting my zone. It broke below the zone. Now I'm looking for a correction in that zone, just like I put it right here. It's correcting. It's almost there. Once you get to this area, and maybe a little bit more higher, I'm looking for a new lower high over here for me to continue now as a bearish move up until give or take this area right here, or maybe even lower if it decides to go lower. Any questions?
So, quick question. So we're looking for an indicator for it to retest, and then that's how we know when to for in this case when to sell it.
Yes, because so far so good is respecting the overall correction that I'm looking for, even though the overall move is what? Bullish. But like I said, because the market is designed for individuals to make profit, even while it's bearish, just so this is what I'm looking for. So if the market comes anywhere around this area and gives me a bearish engulfing, for example, the same way it gave me this bullish engulfing over here, and it gives me, so what is a bullish engulfing? Great question, Zakora. Let me answer it. So a bearish engulfing and a bullish engulfing goes this way. When you have a candle that reduces and the next candle after is greater than the previous candle, depending on what color it is, it's an engulfing. It's just a matter of what. And what is an engulfing? Engulfing is pretty much when something eats the other. Because let me show you something. If you go on a weekly time frame, you see this candle, this thing that you see right here? Let me even design, let me draw it up a little bit. You see this? Hold on, where's there we go. This is what I'm looking for. Boom. I'm gonna show you guys something really crazy right now. You see this? You see this little move right here? When I go higher in time frame, guess what I see? I see a wick. It's just a wick. Same thing over here. If I go any lower to see this, if I go any lower to see that, I see actual candles. The lower I go in time frame, the more candlestick that I see. Why? Because it just means that when the buyers and sellers were in the market at that particular moment, as much as the sellers wanted to sell, as much as on that particular day, which was on Wednesday, the sellers wanted to go low. When Thursday came around, the buyers said, no, we don't want it to go any lower than it already is right now. And then they ate them up. But the buyers have to be really strong that by the time they get to this zone, if not higher, they break even higher and go more bullish. But if the buyers are not strong enough to make it past this level and some, they will definitely come to this area, correct, form another engulfing pattern, which is now going to be bearish engulfing or bullish engulfing to retrace even lower. Does that answer your question?
Yeah.
Any questions in regards to that? And then somebody can read me the next question. I think the next one I probably already answered it. It said I will and then it said, is it possible to simplify the analysis, which I believe I simplified it enough. Could you provide an explanation as to why both markups are potential? Yes. The reason why, like I said, is because of a consolidation that I saw. And when the market is consolidating and just stuck in a certain price range, okay, one of two things going to happen. Is it just going to break above the ceiling, or is it just going to break below the floor? Which one is it going to be? Because now I'm ready. That's basically it. And then the next question would be, or was, this clarification would be great. Okay, cool. Any other questions? Does what I explained today make sense, guys? Was this helpful a little bit?
Definitely.
Okay, cool. So I'm gonna stop the call right here. We did great. We did everything in 40 minutes. And I'm super excited for the next one. If you guys have any other questions, please drop them. Right? I know, like I said, this is free, but I'm willing to do what I can do to make sure at least, even if it's free, I still want to give energy towards what I'm doing and make sure my students comprehend what is going on. But like I said, the individuals I want to level up and get that one-on-one mentorship instead of just groups, definitely reach out to me on the side. I'll be more than happy to help you. So that way you can even fasten your process to get to where you need to get to. If you guys don't have any other questions, I'm gonna definitely upload this on YouTube. So that way you can always refer back to it. I'm super excited for our journey and I look forward to growing every single day with you guys. Any comments, questions, emotions, jokes, anything before I get off? Because this is the last asking, and then I'm gonna end the call.
Oh, that is it.
All right, perfect.
I have a question.
Go ahead.
So now that we see this markup, is this a viable trade to enter? And if it is it too late to enter, or is there a rule, or is there something we should look for before we enter?
That's a great question. So this can only be a great trade to get into for a bearish move if when price gets to anywhere between this zone and over here, if price comes in anywhere in this area and gives us a bullish engulfing pattern, which means something like this, but instead of it being red and then green being more, it's going to be green and then red being more over here. If I don't see that over here, I'm not taking this trade. However, I can definitely wait patiently till it gets above the zone and more to give me a bullish engulfing, which is this right here, over here, to continue the bullish run. Hopefully that answers your question. Does it?
It's fair.
Yep.
Okay, well, enlighten me, because I just said the only reason why I would take it The only reason why I would take this trade is if I see some confirmations that I'm looking for in the bearish aspect. But if I don't see those confirmations and it wants to go bullish, I'm looking for the same thing it did here, up here, for me to continue the bullish run with it.
I see you on the daily time frame. What kind of trade are we going to be looking for if it's on the daily?
Great question. So one thing I've probably didn't mention that I need to mention is the higher the time frame, the longer the trade. The lower the time frame, the quicker the trade, which means if I am on the daily 4 hour, 1 hour, 2 hours, that's more leaning into intraday and swing trading. But the lower I go into 45 minutes, 30 minutes, 15 minutes, 5 minutes, we are looking towards accomplishing a swing, a scalping. Scalping in the sense of you can probably be out the trade within the day, but the higher you go in time frame, it can take you more than a day to get out the market if that's what you're asking. Because now you got to hold it for a longer period of time. And you probably have to wait a little bit longer to take a position.
That's what I was gonna say, because taking a position on this trade sounds like waiting a week or 2 weeks.
And you're very, very much correct. So let's say I go to the 1 hour time frame. And now I see things a little bit different. Same thing I saw on the higher time frame, I'm looking for it on the lower time frame. What do I mean by that? Okay, Zachary, I'm gonna explain. Boom. So on the 1 hour time frame, I see that price came to this level, supported, bounced off, came back over here again, supported, bounced off, broke below. Okay, cool. Now, not only did it break below, it came back up to that same level, resisted, broke below, went lower, went up again, and did not quite get there, went even lower, and guess what happens next? Right after that, it broke above it. So if I'm to want to intraday to scalp, if I want to scalp to intraday this position, I can literally say, okay, you know what? Even though the overall move is bullish, and even though temporality is on the correction phase, I can still come in here and get in within the next few hours. So what I can do is I can literally put my fib and come this way and pull it all the way up. And I'm going to explain this in a different video or what Fibonacci is. And then I'm going to see, okay, well, I want to see when price gets to this level to see what it does, right? Anywhere between this resistance, this support that is about to turn support again within the future that's to come is going to be bouncing off the 50 and the 61.8. But if it goes any lower, the stronger is going to push to go bullish in the sense of, let's say it wants to go even higher than the way it is right now. We can potentially see the market go from over here, for example, because that's why I would take my entries up onto this level at least. And that's a 1-to-4 ratio. 1-to-4 ratio means for every 1, 4 comes out of it, right? So this is what, like I said, same skill set. I'm just applying it in a lower time frame to get in and out, give or take. But the higher you go, the longer you have to wait. But at the same time, you get the point. Hopefully that answers your question.
That was a great breakdown.
Perfect. Thank you so much. You guys, I really do appreciate you so much, man. This is really, really exciting. Matter of fact, I'm actually going to leave those things that I drew on there because you never know. It might just play out and I want to show you guys. So guys, I'm calling this within the next few hours. If I see price come this way, give me some kind of confirmation that is going to continue going bullish. After it corrects for a little bit, within the next few hours, we can look for a potential continuation temporarily, at least up onto the 71 price level, as long as it comes anywhere between 69 and 68. We're going to see in the next future. The same way I did the markup previously, I'm doing another one on Zoom. We'll see what happens next. I appreciate you guys so much. This means a lot to me. I'll be more than happy to do this more often, as long as you guys communicate. Let me know what y'all need. Let me know what y'all questions are. And, you know, anytime, any day, I'm more than happy to get on Zoom to educate you guys. Thank you so much once again, and have